So today's Philadelphia Fed report on manufacturing underscores just about how much the next 6 months must be a major improvement from what our current economic conditions are now. There are two of the most critical components of this report. I got to tell you something. They literally crashed. I mean, new orders cratered significantly, and the employment part slumped to its lowest position since July of 2009. So there are major assumptions, though, with the same numbers, that the next 6 months are going to be huge. Businesses think so. The Fed thinks so. And this rally, if it's not, means that it's on borrowed time, because I got to tell you, we better see this economy shift really quick. I want you to take a look. The dramatic difference on what's happening right now in the Philadelphia area with these manufacturers and what they're thinking about 6 months from now, whether it's conditions overall, employment. It's just absolutely amazing. They are looking for them to stage a remarkable rebound. Another proxy for the economy is Walmart, the world's largest retailer, often considered the best proxy, maybe not as much anymore, but certainly it's still a very good one. It gives us a glimpse into what's happening here. They reported results this morning. For the last 3 months, U.S. sales climbed $2.3 billion, $76 billion, up 3%. That was good. And here's the thing. You had traffic increasing for the 7th consecutive month. You had same-store sales improving for the 8th consecutive month. The company even showed a little bit of pricing power. There's another proxy, too, today. Crude oil continues to be in this stealth rally. West Texas Intermediate now right in the shadow of $50. That's a number, if sustainable, it would lead credence to the idea that the economy is getting better, and it all reflects strong momentum. By the way, after the close, Ross Stores crushed it. They had a great earnings report. Gap Stores eked out one. You can see, though, both stocks are up higher. I'm looking for more gyrations, but I think what's actually happening right now for the market is a base of support is being put in. They're looking for the right catalyst to take it higher. Here to join me to discuss, Frank Congemi. Frank, welcome to the show.
Thank you very much.
That's my thesis. That's what I'm looking at. You heard from the Fed yesterday. We saw the Philadelphia manufacturing survey. Things are horrible right now, but somehow over the next 3 to 6 months, they're going to get really good.
If you look at the numbers just since the last 7 or 8 years coming off the financial crisis, the last 2 quarters have been, how shall I say, better than anybody expected. Sell in May, go away, didn't work for the last 6 or 7 years, and so I think that you're having a lot of revisions in all the numbers across the board. Now,
this is one thing we did learn with this recession from a market investment point of view, how to celebrate mediocrity. Okay, so, I mean, let's face it, come on, we haven't had a quarter over 2.6% going back to 2014. So, yeah, I mean, when 1.5% looks pretty good and you beat the estimates, that's not necessarily saying much, particularly when you've had a rally to this degree. So I think what a lot of people are very antsy right now, they're wondering, how does this economy shift to the degree that it feels like the Fed says it will, it feels like manufacturers in Philadelphia says it will, and even some of these earnings we're hearing from businesses. Is that even possible?
Well, the thing about earnings is very interesting because, you know, that's what drives stocks. That's why people buy stocks. And in any given year, 20% of the companies are going to miss their earnings call. So when I hear about things like interest rate, which is a non-start, because a quarter point really isn't going to do anything.
No big deal. Psychologically, though, it will have an impact.
Well, psychologically it might, but in the real world, you and I know that a quarter point doesn't mean anything because stock markets go up in a rising interest rate environment. So that's not really something that I'm going to be wringing my hands about.
Let me ask you then, could the market be looking at November, and if so, could they be anticipating a Trump victory?
Well, 2 calls that I was on recently. One calls for the period from November 5th to December 31st. The market could go up 1,000 points. And another one definitely calls for the end of 2017, the Dow 20,000. So I think the market is anticipating something. And it would be nice to get a change in regulatory structure and tax structure. I think that's going to be a huge boost for the market.
Getting back to your original point, that earnings drive the market?
Yes.
All right. Thank you very much, Frank.
You're very welcome.
Appreciate it.
Thanks very much.